Hey there, and welcome to the Deep Dive. This one's really tailored for you, someone based in Indonesia thinking about building that long-term passive income using government securities.
That's right. We're looking at two specific options you brought up. There's a USD bond, Indo-Eyes 54 new, and then an IDR retail sukuk, the SR022T5.
Yep, and our goal today is to cut through the details, figure out what really matters for your goal, especially, navigating that big question around currency.
Mm-hmm. And honestly, the key thing right off the bat, both are super safe, backed by the Indonesian government. You're lending to the state.
Exactly, low risk there.
Mm-hmm.
But the currency they actually pay you in, that changes absolutely everything for your day-to-day spending in Indonesia.
It really does. Okay, so let's break them down a bit.
Okay, first up, Indo-Eyes 54 New W. What is it?
So this one's a bond denominated in US dollars. It pays a fixed rate, 5.65% per year, but that's paid semi-annually, so twice a year.
And after Indonesian tax, that comes out to about, 5.085% net in USD?
Correct. And the maturity on this one is, wow, it's way out there, 2054. A very long-term hold.
Yeah, and getting it initially wasn't cheap, right? Like
Yeah.
USD 200K minimum.
That was the primary market minimum, high barrier. But now you can usually find it on the secondary market, much more accessible, often around a USD 1,000 minimum buy-in.
Okay, got it. So that's one option. What about the other one, SR022T5?
Okay, SR022T5. This is different. It's a retail sukuk, so it's structured to be Sharia compliant, which is important for many,
Yeah.
and crucially, it's in Indonesian Rupiah, IDR.
And the rate, it's higher nominally, isn't it?
It is 6.55% fixed per year. After tax, that nets you about 5.895% in IDR. And a big difference, this one pays out monthly.
Monthly, okay. That seems much handier for regular income.
Yeah.
And accessible.
Very. It was designed for retail investors like you. Minimum is just 1 million rupiah. And it matures much sooner, too, 2030.
So shorter term, lower entry point, monthly IDR payments.
Exactly. And just to stress again, both of these, the USD bond and the IDR sukuk, are guaranteed by the Indonesian government. Default risk is considered very low on both.
Right. Okay, now the really crucial part for you listening, because you live in Indonesia, you spend in rupiah, the currency difference.
This is the core issue, yeah. Your expenses are in IDR.
So if you go with the Indo-Eyes 54 New W, the income comes in USD. Now, historically, the rupiah, well, it tends to depreciate against the dollar over time. Right now, it's, around 16,300-ish?
Mm-hmm, around there. So on paper, your fixed USD income should convert into more rupiah as time goes on, assuming that trend continues.
More rupiah sounds good, right?
Nominally, yes. But here's the catch, and it's a big one for your actual spending power. IDR depreciation often goes hand in hand with domestic inflation within Indonesia.
Ah, okay, so the prices of things you buy locally might be going up too.
Precisely. That inflation erodes the real value of those rupiah you just converted. So even if you get more rupiah, they might not actually buy you more stuff. You have direct currency risk impacting your local purchasing power.
Okay, so that's the USD side. What about the SR022T5? Income's already in IDR. Seems simpler.
It is simpler in that sense. It aligns directly with your local expenses. And those monthly payments, as you said, they simplify cash flow for, daily life.
But it must have a downside too.
Its main vulnerability is that same domestic inflation. A fixed IDR income stream is predictable nominally, but if Indonesian inflation runs high, the purchasing power of that fixed amount can shrink quite a bit over the years until 2030.
Oh, it's like a race.
Yeah.
Between the rupiah potentially weakening, which helps the USD bond's nominal payout in IDR, and local inflation, which hurts the real value of both the IDR income and the converted USD income.
That's a great way to put it. It is a dynamic race. Nominally, yeah, the SR02T5 pays a higher net yield in rupiah terms right now. But the real spending power you get, that's much more complex and depends on how those two forces play out.
Okay, that makes sense. It's not just the headline number. Let's talk practicalities then, getting into these things.
Right. SR022T5 is clearly built for easy access, that 1 million rupiah minimum monthly payouts. Very practical. Plus, it has these standby buyers.
Standby buyers? What are those?
Think of them as designated financial institutions that are basically ready to buy the sukuk from you if you need to sell before maturity. It helps provide some liquidity, makes it easier to get your cash out if needed.
Ah, interesting. Okay. And the Indo-Eyes 654 new to you?
Well, we mentioned the high primary minimum. Secondary market helps, but it's still maybe less straightforward than the retail sukuk. Payments are only twice a year. And that super long maturity, 2054.
Yeah. What's the issue there?
It means its price on the secondary market is highly sensitive to changes in general interest rates. If rates go up significantly, the market value of your bond could drop quite a bit if you needed to sell early. Longer bonds have more price risk.
Gotcha. So more moving parts with the USD bond, practically speaking. Okay, let's try and wrap this up for someone building passive income. What's the main thought process?
Well, the SR022T5 gives you that straightforward IDR cash flow for local needs. Its main enemy is local inflation eroding its value over time.
And the Indo-I-74
It offers a potential hedge against the rupiah weakening, preserving wealth value in USD terms. But converting that to usable IDR means dealing with exchange rate fluctuations. And again, that local inflation still affects how far those converted rupiah go. The local spending power is less predictable day to day.
So it kind of leads to the question, do you just pick one? Or maybe think about both?
Diversification could definitely be sensible here. Holding a mix, maybe some IDR via the sukuk for steady local cash flow, and some USD via the bond as a hedge against bigger currency moves. That could balance things out for you.
And you definitely can't just set this and forget it, can you?
Absolutely not. The sources really hammer this home. The USD IDR rate, Indonesian inflation. These things are dynamic. They shift based on global stuff, local policies. You have to keep an eye on the big picture to really understand what your income is worth over time.
Right. Monitoring is key. Okay, so for you listening, living and spending in Indonesia, it feels like the core trade-off is this. Maximize that easier, potentially higher nominal IDR income now with SR022T5 for straightforward local cash flow, accepting the inflation risk.
Or prioritize the USD hedge with Indo-I's 54 new W, accepting the conversion complexity and the volatility it brings to your actual local spending power, hoping it protects the overall value better long term.
Yeah. So here's the final thought to maybe chew on as you build your strategy, given your life is based in rupiah. How do you strike that right balance between getting reliable IDR income now for your expenses versus protecting the long-term buying power of that income against both potential currency shifts and that persistent local inflation? It's a tricky balancing act, something worth really thinking through for your specific situation.